Welcome to the Deal Champs podcast. We got to connect my Instagram. I'll get on that after the intros. Guys, we have an amazing guest on today, Tim, who I think is the master of business development. That's the name I've given him. You guys don't see it as much, but Tim showed me how to work a room and network when I met him when we were growing call magicians. We would go somewhere and Tim would buy everyone beers. And then he'd clean up and everybody would do loans.
Tim is the master of a good time, bro. That's what I like. That's how I know Tim. Tim knows how to cut it up and have a good time. That's why I like it, man.
100%.
I put the fun in funding is what they say.
That's right. Hell yeah.
I like you that. You are the absolute man. Real quick, guys, we're going to do some really quick intros. My name's Stratton Brown. I made my first $1 million in business at 25. We have a 7-figure real estate portfolio, and we've scaled 2 different companies to 7 figures. I've been in real estate since I was 22, 23. It has been the absolute best thing for me because I can make money out of thin air, and that skill is never going to go away. We have the master of hair who put the hair away because I think he tore his hamstring running a half marathon this weekend, but it's okay.
I'm in a lot of pain after the half marathon on Sunday, but we made it. We're here today. I'm your other co-host, guys, Jason Pritchard. Backstory on me is I worked in corporate America for 15 years. Was unhappy with my job, unhappy with my life. We burned all the boats in 2014, have not looked back since. We've done close to 600 deals at this point. We have a mix of fixing and flipping, wholesaling. We've got a $17 million real estate portfolio, and now we are starting to take on some larger development projects.
You didn't go live.
I hit go live.
It doesn't say go live.
It says go live. Fuck. Now
we're live. Bro, now it's live.
Now we're live. Now we're really live.
Bro, it was 100% StreamYard's fault. That was not me. I hit go live. I was watching that bitch.
Hey.
All right. We're live again.
We've been talking to ourselves for 5 minutes straight, guys. So now we've got a warm-up now. We're ready to go.
We have the master of business development, the master of a good time, Mr. Tim Herriage with Turnis. Real quick on me. Scaled 2 different companies to 7 figures. Made $1 million at 25. We have the master of hair who blew out his hamstrings over the weekend, Mr. Jason Pritchard.
Fresh off a half marathon in San Diego, feeling good.
Are the hammies hurting?
Everything below my waist down is hurting right now. So yeah, I'm in a lot of pain. I went to the gym today to just shake off some of the rust, but it was good. I like just having some physical challenges like that every once in a while to know that I still got it, dude. So didn't train much at all. Pushed through. We made it. We finished. So that was good. I'm your other co-host, guys. Say it again.
Was it hard to push through? Like at a point in time, you're like, fuck.
I've done 8 half marathons and 1 full. So I've done a number of these. So I know what we're doing, but with no training, and I'm probably a little heavier than I normally am. The last 3 miles were kind of a pain.
Too much muscle, dude.
It was, dude. Getting big.
It's too much testosterone, bro.
It is, dude.
Dorito chip, dude.
I have to ratchet it back on the TRT, dude.
Got the wings, dude. Too much wings.
Too much muscle, boys. It's a tough life. Anyways, guys, your other co-host, Jason Pritchard, worked in corporate America for 15 years, hated my job, hated my life, burned all the boats in 2014, have not looked back since. We are approaching 600 deals fully completed and a $17 million real estate portfolio, also dabbling in some large land development projects which we're really excited on. I'm very excited to have our guest, Tim, today. Tim is the man. We've known him for a number of years just through different masterminds and events, and one of the sharpest guys that I know when it comes to markets and understanding the economics and everything going on in the real estate field. So you guys are in for a treat today. I think this is going to be a good one.
And we got Mr. Captain America, Mr. Dean Rogers.
What's up,
Spreadsheet
guys?
King right now, by the way. That's what Dean is.
Right. Guys, your other co-host here, Dean Rogers. Excited to have Tim on today. Always a good time around Tim. And I'm always excited to hear what Tim has to say. This dude knows his stuff like almost nobody else I know. There's very few people that I am excited to hear what they have to say. Tim's at the top of that list. Guys, I started my career in the NFL. Then I transitioned to corporate, then into real estate. Been investing in real estate for a decade now in Central California. Done 750 plus deals, have an 8-figure rental portfolio. And I've made it official. I'm now going to be buying apartments. I've been buying rentals, rental portfolio, duplex, triplex, quads, all that kind of stuff, buying apartments now. So going to be giving you guys updates on that. You guys can always connect with me at deanrogers.com.
I love it. All right, master of the good time, the man who we all go to when it comes to markets. I wanted you at we want you to come speak at all of our events because you're so good at markets and it is so insightful and we learn so much. And as a businessman, I think you're a killer entrepreneur.
Yeah. Say when, bro. I'm there.
Give us a quick little intro, Tim.
Yeah, Tim Herriage. I've been buying houses for 23 years, bought a couple thousand of them. Don't even know how many, don't care. I've done tens of thousands of loans, billions of dollars of loans to investors. I'm on my 19th startup now. Half have failed. A couple have been wildly, insanely successful. Some have just been, okay. So I'm a serial entrepreneur. I'm a builder. Can't do anything longer than 2 or 3 years. So I love doing that. I love networking. And one of my core values is service. And I think, I'm in a really cool position that I get to make millionaires. And I love going around the nation and talking to people because mistakes in this industry are really easy to make and very difficult to recover from. And this business has taken me from a stupid Marine from East Texas to a guy that has lived a life most people could barely dream of. So I'm just happy to share and help people grow. And I believe in the power of wealth creation through real estate.
Heck yeah.
Thank you for coming on. Do you think the market's taking a shit right now? We had another markets guy on yesterday, and then now he's posting that everything is falling out.
As soon as we had that episode,
as soon as we had it, bro, I saw some.
Every headline video daily is crash, crash, crash. That's so good.
I think people have to really understand how politics work. At the end of the day, we are a nation now that has no pain tolerance whatsoever, and we live in 18-month sprints. So if the market does, quote unquote, take a crash or a dive or a shit, I'm not worried about it because within 6 months, there'll be a bill passed to put Band-Aids on all the babies, right? Like we're just not willing to go through the necessary pain to fix the underlying issues in our economy, in our system. So I'm just as bullish, excited about everything, every asset class, every market, as I would be in any other market. I mean, so for me, I don't think the market's going to crash. I think it's going to be more of the same. The jobs numbers came out today. They were awesome. Inflation numbers came out a couple of weeks ago. They were awesome. They're going to come out again in a couple of weeks. They're going to suck. They're going to come out again after that. They'll be awesome. We're in the real estate market in 2018. It's just going to be a little up, little down, little up, little down, little up, little down. Slow and steady will win the race.
Real quick, Tim.
Dean had his finger up.
I have my finger.
Dean had the finger up. You had the finger up first. I was writing down my question.
Tim even saw it. So you're in a unique position because you've been in the real estate investing space. You've been lending money to real estate investors. Like that's not something you just casually do. Like you're betting on the market. You're betting on that borrower and their success. You said something interesting there about we have no pain tolerance. Putting Band-Aids on that, if you reflect in at least the past 5 years, certainly been that case. There's been no pain that should have happened like 2008 that I only hear about. I was in college during that time. Do you think that I'm trying to think of the term, but does the music stop? Do you think the music will stop or no? You said it right now. They're just going to keep putting Band-Aids. Like, is there a point where the music has to stop?
Only if they get rid of social media. Until then, with a razor thin 1% margin on either side of the aisle and no real commitment to core issues or core improvement, if the politicians don't do exactly what they're asked to do, which is make life easier for Americans, it will just simply go to the other side. And then if that side doesn't do what they ask them to do, just go to the other side. It's frankly, you go back 300 years, and it's why Jefferson warned against having a two-party system, because it just allows you to lose all discipline whatsoever. So no, I don't think we ever face the music. I think we just keep creating new chords and new instruments.
Do you think me and Jason listen to the All In podcast, and the Chamath guy is like GDP growth is all we need to like fix all of our issues, and it'll outpace the debt spiral that's coming. Like, how do you think about that stuff? from like a macro perspective?
GDP growth is great. The debt spiral, there's an economist in Texas named Mark Datsur. Eventually, we'll just have these massive debt jubilees. I mean, bankruptcy solves everything. And I mean, it's just so bankruptcy, and it will reset itself, and there'll be a $1 trillion wiped out that probably never should have been, never existed, and you just start over. The biggest risk is taxes. If taxes go up too much more, that's when innovation starts to suffer, and that's what's really made America such a great creator of new products and services and technologies, is that those that work really, really hard get rewarded really, really well.
Couldn't agree with that more.
Do you think AI is going to take away everything? Sorry, Dean, you waited a little bit too long, bro.
That's right.
I think AI is going to make things crazy in the next 10 to 15 years. I think if you don't own a portfolio, it's going to be like you want some type of asset that's going to be turning off cash, because I think there's a lot of jobs that will be displaced, and I'm not in the school of, it'll create a bunch of new jobs. This is moving so fast that there's not even time for the jobs to get created for those people who are going to be jobless.
It's inevitable that young men make fun of old men, and old men ignore young men. The speed of development is very interesting, but I don't think AI, machine learning, whatever you're saying, makes that big of a difference. It does to computer coders, but you still have to have a vision of what you want to code, right? It does to copywriters, but you still have to know what the emotion is you're attempting to trigger in the marketing, right? Like, I mean, look, I think we'll move towards more of a welfare state. I mean, if you want to really go there, Strat, we can, but we ain't gonna be talking about real estate. Right? I mean, if you want to go towards more of a kumbaya welfare state, we'll do that. I mean, I don't know. I don't get big into all that 80-year down the road stuff. I think there was an interesting thing my sales manager here at Turnis said recently. He said, look, focus on things you can control. And he was talking to a sales guy that was complaining, the salespeople, right? There's not enough leads. There's too many leads. These leads suck. There's not enough leads. There's too many leads. These leads suck. And it's like just a spiral. And he's like, great. I hear you. Did you make your 35 calls today, Jason? Right? Like, I'm not talking to you about the leads. I'm going to talk to you about what you can control. So I think with AI, it falls in that category. There will be advancements, and then there will be jobs around the advancements. Just so you know, I mean, the automobile was going to destroy the train industry. And last time I checked, there's a train track in every downtown in America, and it's still used. So I think things will change, but change is good.
Tim, you said it, dude, earlier during your intro, you've lived this amazing life. That's one of the cool things that I really like about you. You said it, man. It's like from East Texas, Marine, real estate investor, buying, selling houses. Then you're all the way like on Wall Street, working with hedge funds, starting all these businesses. I think real estate, I always say, is like the vehicle where every man, like the everyday person, the average person, can become successful. You don't need to like be overly intelligent. You can just work really hard and do all of that stuff. You've been exposed to American business like at the highest level, right? Like people that are like top of the food chain, right? Like what are the things that you've learned being around those people, being involved, putting those deals together, being around that high level of a person that maybe can trickle down and you could give advice to some of the people, because you're around people that are like hustlers that work really hard, but then they can never get past a certain point, right? And you've done all of these businesses. What are the things that you've learned in that journey that you could share with the everyday investor?
Oh man, the biggest takeaway is it was probably 2014. I'm in New York. One of the senior managing directors from Blackstone and I are going to grab a drink. We've never spent some time together, so he wanted to get to know me more on a personal level. We were thinking about me becoming the CEO at some point, and we go have a drink, and we're leaving. And I was like, "Hey, Jazz, what do I need to work on?" He goes, "Tim, it's not you, it's everybody." He goes, "At Blackstone, we hire the smartest people in the world, and we expect them to be wrong at least 30% of the time." He said, "But the way you're successful is you acknowledge when you're wrong and stop." And I just remember like sitting there like, okay, that's interesting. And he goes, "So the key is you're going to make mistakes. Just stop your mistakes when you start making them." And he puts me in the cab, and I'm trying to like hail down the cab, and he lets out that New Yorker whistle, and next thing you know, cab pulls over. And I'm in the car riding down to Madison Square Garden. We had awesome tickets to a New York Rangers game that night in a suite on the ice level. And I'm riding there in New York, and I'm thinking, how cool is that? Because a baseball player, if they're successful, if they play for 10 years and they're successful 30% of the time at the plate, they're in the Hall of Fame, right? But we as entrepreneurs, we try to be perfect, or we wait for that perfect deal. And I think the biggest thing that we as entrepreneurs can do is have radical transparency, like Ray Dalio talks about in his book, The Principles, and be willing to own our mistakes and learn from them and stop the behavior that caused those mistakes. Oftentimes, it's not what we did that causes the mistake. It's what we didn't do, right? We didn't double check the due diligence model. We didn't really focus on the trailing 12s. We didn't look at market saturation for self-storage. I mean, there's just oftentimes in real estate specifically, the problems arise from what you did not do versus what you did. And so I think, the biggest lesson is, number one, a group like Blackstone recommends that you take action, right? And they acknowledge you're going to be wrong at least 30% of the time. And the key is to stop it, cut your losses, and move on. And out of ego, we tend to dig in and make our losses worse.
How hard was it for you, just like mentally, emotionally, getting into a room with like the CEO of Blackstone and dealing with the pressure of like, I have to go sit down, negotiate a deal, put together something with this guy? Like, what's going through your head, dude, the first time you go through that? And like, how are you navigating that to get to the point where you feel like you can play at their level?
So it's November of 2013. Some of y'all, I don't know, may not even been able to drive yet. And they're like, "All right, we need you to fly up." I'm like, "All right, cool."
Stat was in diapers at that time.
I was just graduating high school.
Yeah. They fly me up, and it's the royal treatment. They have a car pick me up on the tarmac, blah, blah, blah. I go over to Park Avenue, and I'm meeting with 20 people from Blackstone. They're all in this 43rd floor, Park Avenue. Central Park's out the window. I mean, it's the king of Wall Street type stuff, right? And the day before I left, I called my dad. My dad's in corporate business, and I was like, "Dad, I'm just a house buyer. I'm just a Marine. Like, what do I do?" He goes, "Do not wear your boots." That's all it's the best advice he could give me, because I always wear my boots everywhere. And I did not wear my boots. I had to go buy a pair of dress shoes. And dude, it's so funny. I show up an hour and a half early because I don't realize the time zone change. Things are wrong on the calendar appointment that they sent me. I show up an hour and a half early. I leave. I'm so nervous. I'm walking up and down the street. I duck into a bar, like have a shot. I'm like, this is awful. I get back up there, and it was the most surreal thing ever. I wait, and it's this 20-foot ceiling, mahogany walls. I mean, I've got Central Park behind me. I mean, I'm looking out the window like, God, this is so cool. It's in the same building where the NFL is. And I go in there and I sit down at the table, and there's like 10 or 15 people down here on the left and 10 or 15 people down here on the right, and 3 empty chairs. And the billionaire that had brought me up is sitting to my left. And then all of a sudden, the 3 really important people come cascading and sit directly to my right. And that billionaire that brought me there, it was recruiting me. He's like, "Hey, okay, Tim, tell him this." And then I start talking. He'd shut me up and make me talk about something else, and shut me up and make me talk about something else. About 5-10 minutes into it, the most important guy to my right gets up and says, "Hey, good to meet you. I got to bounce. Look forward to doing something with you." And he leaves. And I'm like, that can't be good. Yeah. I keep talking. 5 minutes later, the next guy gets up. Hey, man, good to meet you. Got to bounce? I got to, blah, blah, blah. And by the way, I'd never heard anybody say I got to bounce, and I got it 3 times in a row within 10 minutes. Right. So I'm just thinking, man, I must be sucking at this interview. And as soon as the last important guy goes, the billionaire, he doesn't care about the other 10 or 15 people, all the junior analysts that are at the table, because their whole job is just to pick apart everything I said and then go research it, data validate it, blah, 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 blah. And the billionaire's like, okay, let's go. And he gets me up and I walk out. Now, mind you, I've been in this meeting for 15 minutes. I've been traveling for 7 hours, right? He walks me to the elevator. He's like, okay, we'll be in touch. And literally as he's saying in touch, the doors close in my face. And I'm like, the hell was that?
15 minutes, dude.
They got a car waiting for me. They put me in the car that's taking me back to Westchester Airport. I call my wife. I'm like, hey, I'm done. She goes, what'd you do wrong? I go, I don't know. A month later, I was the managing director. So, I mean, it's just what you learn is these people, they know they have the money, but they don't have the time. And they're not looking for you to sell them. They're looking to figure out, are you confident enough to make decisions, and do you seem competent enough to be involved? And that's it. They don't need to know everything. See, we all want to know everything. I want to know everything Dean knows. I want to know everything Dean knows. I want to know everything. Why? Just hire Dean. Then you don't have to know what he knows. Just feel like Dean is not going to rip you off, right? I mean, so that's probably the biggest thing about it. Like, it was one of the most nerve-wracking days of my life. And then, a couple of years later, I'm the guy that can only join a meeting for 10 minutes and I got to bounce. So that's the way the life works.
How efficient was Blackstone? Like
More
when
efficient
you're there,
than anything you ever saw in your life. More efficient than anything you ever saw in your life. They had this cafeteria on one floor. They had like gourmet chefs and stuff cooking like 24 hours a day. And they're like, hey, if somebody wants to work all night and work all morning, we'll feed them. And it was just like, and it wasn't a buffet, man. It was like world-class quality food. They are more than, they do not get emotional about business. And that's something we as entrepreneurs struggle with, because it is personal, because it is our business. They look at everything as dollars and cents, pluses and minuses and percent signs. I mean, it's just, once you're down 10%, cut your losses, move on, go do something else, go make 30, right? Like, it's just, they are efficient in their financial and fiscal discipline. Otherwise, they don't give a shit about how you feel, Stratton. They're paying you $500,000 a year. They don't have to care how you feel.
And why did you not continue to just stay with them and then grow there? Why come back to real estate? Why do lending?
Oh man, I found myself, it was the first corporate job I'd ever had. I did not hate my life like you said, but I don't know, man. We had built it, and it was getting down to like manage it time.
Yeah.
And I was getting bored, and I was traveling a lot, and I had young kids, and I was like, man, it's just, so July 15th of 2015, I resigned my position. Kept my equity. We took it public in 2021. Did okay on that. And I think everybody has to realize that about their personality. So at Turnis, we started in January of last year. I started out as the president. Now I'm the CEO, even though I'm the majority owner. I didn't give myself CEO title first because I don't know how the hell you can be a CEO of a 2-person company. That just seems stupid to me. But now we got almost 40 people. We'll be at 100 people by the end of the year. Sorry if any of y'all call your CEOs. But now we're offering stock in our company. And since I'm actually selling stock in my company, the company needs a chief executive officer. So I'll be the CEO for another year or two until I get done building all the pieces I need to build. And there's no more room for Captain Chaos. And then I'll step up to the board and hire a CEO to run the day-to-day so that I can be pure visionary and continue to look at ways to innovate and improve the industry and the company.
Going back, looking at your time with Blackstone, the people that you were probably around hundreds and hundreds and hundreds and hundreds of people. The core people that you interacted with, I mean, were these just all killer A players, or were there a lot of average people from your perspective? Like what did the surrounding, people you were working with look like, and what was the culture like?
Yeah, I'll tell you this. I've got 4 of them that work here at Turnis right now. They were my time at Blackstone / B2R Finance / Finance of America. Those were all the different names we had. I was around some of the most impressive people I ever met in my life. I mean, people that you're just like, holy shit, like he is smart. Like she is savage. Like, I mean, people I didn't know existed in the world, right? I mean, at one time we're sitting in the Mandarin Oriental, which if you're familiar with Manhattan, it's like one of the most expensive hotels in the Manhattan. It's right on the Columbus Circle, overlooks Central Park. And we got the whole room reserved, big old table. And they're like, all right, everybody go around and introduce themselves, because we had just bought 3 or 4 different other companies and merged them in. And it's like Harvard, Yale, Stanford, Princeton, Harvard, Yale, Cornell, Stanford, Princeton, Oxford, Harvard, Yale, Princeton. And I'm over here like Marine Corps. It's like, I got nothing for you, bro. No, I mean, they're just some of the most impressive people in the world, but culture. First board meeting, April of 2014. I'm up in New York preparing for the board meeting, and 8 o'clock rolls around. We're not done, right? And I'm like, all right, what are we eating? That was like right when before Grubhub and stuff. So we used a service in New York called Seamless. So we order food for everybody in the office. Midnight rolls around. We're still working. Like 1 o'clock, 2 o'clock, we're still building this board deck. And I was in the Marine Corps, and I've done that kind of stuff before. You stay up late when there's lives on the line, when there's important stuff. But I mean, to build a board deck, so we're there till 4, and then we're back at 9. And I just remember thinking, God dang, the problem with private equity is they believe that their compensation offsets culture, and it does. It does, because they pay well. I've never made as much money in my life as I did with Blackstone, and I've made a bunch of money. But they pay well, but they don't really have to care about culture, because they know you're going to wash out anyway. You're either going to be the 1%, the 1% that's going to make it to executive level, or that next new analyst that will give them 19 hours a day is right behind you, and that dude graduated with a 5.0 from Harvard.
Yeah. Yep. And they'll get 2-3 years out of him, and then they'll cycle again. Go ahead, Jason.
I've got a couple questions. One, how big is the chip on your shoulder when you're in a room like that? Do you carry a big chip, and do you use that to motivate you? Like you being a Marine, Texas boy, and you're around all the Harvard, Yale grads, and it's like, is that a motivator for you, or did you not care about that type of stuff?
It probably was at first, until one time. So by the way, that was the only time. The first time I went was the only time I didn't wear my boots. After that, I started wearing boots, because I love my boots. I show up and I wear nice boots. These are handmade Luke Casey boots I'm wearing right now. It's like $2,000 boots. So I walk up in this kid in like shitty shoes, like, oh, of course you're wearing boots. And I was like, boy, one of these boots costs more than your entire outfit, so shut the fuck up. But no, it's actually one of the greatest compliments I ever got was I would stop any conversation whatsoever in any audience whatsoever if I did not understand what they were talking about. And it's part of my, you guys were kind of complimenting me on my knowledge about data and stuff. I'm a very eager learner. I've always been a very eager learner. And if you're going to throw around acronyms in front of me, you're going to have to explain them, right? Because I'm not just going to sit there and pretend, yeah, MOIC, yeah. It's like, well, what the hell's a MOIC? And they're like, multiple on invested capital. Got it. Thank you. You may continue, right? Because I think I add value with my experience. So why not understand what you're saying so I can add value? So no, I didn't carry a chip around, man. But also I didn't need them. I mean, at this point, I'd already bought 1,000 houses in my life, and sold a couple companies, and I made it through the Great Recession. I didn't need them. So there's a lot of power in that, knowing you don't need someone.
One of the things that I notice is a common thread with lots of the guys that I aspire to be like, and there's a small handful of people out here. They will never consider themselves the smartest person in the room, but they always go out and say, I find really smart people. And I heard you say that earlier. So those smart people, were they like equals to you? Were they working for you? And if they were working for you, how do you go find that talent if you're not Blackstone and you can't just pay $1 million right out of, or whatever the compensation model is, right? Like, what would you like? What are some tips to find those smart people if you're still growing and you can't just write a blank check?
You have to be willing to train, right? So it's actually a really hard job market out there right now. And a lot of people, specifically real estate investors, like they won't offer a salary, a base salary. And it's like, why not? If you run the personality profile or assessment the right way, and you wrote a job description and you did the interview, you're really signaling, hey, I'm not confident in my hiring ability because I'm not willing to put my money behind you. And the right person that frankly isn't going to leave you once they learn the business, or that wants to build a long-term career, right? They need stability. They don't have that weirdness in their head that we do, that we can just jump out of the plane without a parachute and be like, yeah, I'll be all right. I'll figure it out. Right. They need to know, like, no, here's your parachute. It's right for flight and left for life. And here's your backup. And like they need you to know that. So I think that's number one, is I think our job in that old mastermind, you and I were together with every house buyer in the entire nation sets up their compensation the exact same way.
Yeah.
Right. 100% commission only, percentage of the profits. Maybe they'll give you a draw. Maybe they'll give you an advance. And I'm just saying, like, be different. Like, pay them 50 G's a year in a smaller commission. Give benefits, right? People are like, oh, it's so expensive. No, what's expensive is constantly freaking hiring.
Freaking turning people. Yeah.
That's what's expensive. What's expensive is taking you out of your development deal. Was it Vegas? Bakersfield. And then making you go do a team architects assessment and do 7 interviews and then start training a new acquisitions rep. That's expensive, right?
Yeah.
So I think you can recruit top talent. Too many of us hire B players because we're not willing to structure the compensation as an A player. I'll tell you right now, at Turnis, we're 37 people now, and I don't have any B players. I had 3, and they're gone. And I mean, we're giving equity. We don't pay super well. We have bonuses. We have stock options. I have a 401k. I have dental and vision, all that stuff. But I think, if you want that long term, like, why not, Jason, create a corporate environment where people have stability and structure and culture and they don't hate their job? Right? Like, because that's the power we have. Like we can take the best practices from the best companies in the world.
That's exactly what we're doing right now, dude. It's like we've been so mom and pop and like flying by the seat of our pants, and it's what got us here. And I've actually found that the right answer is somewhere in the middle. It doesn't all have to be buttoned up, but there was some really good things. And there's a reason why those companies grow to the size that they do, because they have these practices, and it's like trying to meld and find the balance between the two of them. I couldn't have said it any better myself, dude. That's a great.
Well, here's what's funny. Yesterday, we're in every other week, I do a meeting of all my vice presidents and up, right? So there's like 8 or 10 of us now. And we're talking, and somebody mentioned a new servicing thing that was going to change the servicing department, but it was coming from finance. Anyway, I'm like, hey guys, look, before we start having conversations that are going to impact multiple departments, we need to have a change committee. We got to figure this out. I don't want to make it a committee, but we have a change management process. And it was funny. I saw my chief operating officer smiling on the call, but she didn't say anything because she didn't want to like go against me. But a minute after the call's over, she sends out the change management process that she had actually rolled out last month, and I just never read the fucking email. So, but that's what it's like to have A players, right? Like she already saw that coming because she's got 30 years experience, right? Like I got people, my C-suite, they manage me up. They're like, no, please get out of it. You are screwing things up. Get out of it. And when they manage me up, it puts me where I can do things like this. It puts me where I can think strategically. It puts me where I can go on a walk, right? And so I manage up, they manage down. I think you gotta hire great people.
When you're hiring these people, is it all? You said you need to have a good gut feeling earlier. Like, yeah, you just kind of got to know.
No, I didn't say gut feeling. I don't like gut feelings, because the problem is when you use a gut feeling, you hire someone you like. You don't hire someone good for the job. We use a company. It's based Steve Richards' company, Team Architects. They do all of our hiring. We're their largest client. We start off with a job description, then turn it into a job requisition form. Then we send it over to team architects, and it has everything defined, all the roles and responsibilities. They reprogram their assessment. If you don't make above a 70 on that assessment, you don't get an interview. And it's just, we don't hire who we like. We hire who matches the job fit. And so now I'm a big fan of it, and we've gotten some amazing people.
What about for you as a visionary, Tim? Like, I've always said, like, there's a science to business, and then there is kind of like this art, this instinctual thing that you have, right? Like, for you at the highest level, obviously it's nice when we have systems, processes, you've learned all of that, but you've had to develop like this natural instinct for business, right? That is unique to you, that maybe can't be delegated out to somebody new right out of grad school, right? So how are you balancing using that when you're making these big decisions for your company, or is it just all systematic, cold-blooded approach like in Wall Street?
You know, the biggest feedback from my C-suite is please stop sending company-wide emails, because I get excited and think I know what I'm doing. And the problem is I don't consider the ramifications and the cross-departmental impacts.
Yeah.
Right. I'm just like, no, this is a great idea. Let's do this. And it's like, I issued new underwriting guidelines one Saturday, and boy, I got some hate mail from the C-suite. I'm still very intuitive when it comes to the direction of the company. But if you look at the EOS chart, right, you have visionary and then integration. Mm-hmm. I really try to stay out of process-related decisions or conversations even now. Like, it's got to where I can't even go to lunch with the team member without a member of my C-suite there, because when I speak, it's policy, right? It's like from the mouth of God. And next thing that I know, there's an email 2 days later. Well, Miles said you could do this, Tim, and he said you told him he could at lunch. And I'm like, yeah, sorry. But you know, so it's still intuitive. I use my core values as a tool, Jason, not just something up on the wall. Yeah. I actually refused doing core values for a while until I was at the Boardroom Mastermind, and my buddy Brandon Brittingham and Alex Gerhardt said, look, you want your company to be this, 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 and this. You don't like core values because you think they're stupid. Well, don't make yours stupid, number one. And number two, core values are supposed to tell the team how to function and how to make decisions in your absence.
Yep.
And then I was like, well, then I like core values because I intend to leave this chair one day, and I want the company to continue to operate in core values. And then I took it a step farther. I'm a stupid Marine, so we got to have acronyms for everything. So our core values is STARS: speed, transparency, accountability, respect, and service. And we give out a monthly STARS award now that is nominated by the entire company. So I've already got 40 nominations because we give it out on the 15th of the month. I've already got 40 nominations of different people from different people in the company. Like the loan officer will nominate the processor, like, oh my God, she just went above and beyond. She worked. I was getting emails from her on Saturday. So this accomplishes three things for me. Number one, eventually someone gets a $500 Amazon gift card. And that's not chump change, especially for some people that, you know, they may make $40,000, $50,000. We made our virtual assistants in the Philippines and our technology developers in India eligible for that as well. That's a lot of money there, right? But I also get to see who in my company actually cares about. So number one, I get to financially reward someone. There's three reasons I do it. Financial reward. Number two, I get to see what people really think about people and who those unsung heroes are in my company. And it may be subconscious, but eventually one of those people are going to be up for promotion, or I may be thinking about creating a new role or something. And I'll be like, man, we really need to try to get so-and-so into that role because every month people are saying this about them. But then number three, and actually, they're not on Instagram. This month's winner is actually going to be the guy. He did 17 nominations last month. And that just means the world to me because one of my core values is respect. And how respectful of our company and of his colleagues that he spends that much time, more than double anybody else ever, nominating people. So I'm actually going to flip it because I want more nominations so I can read more good things about the people that we've had.
What are your other good culture incentives that you've created?
So I hate work from home and hybrid. I just hate it. But we still do it on Mondays and Fridays in the company. If you're over 50 miles away, you only have to come in 2 days a week. If you're under 50 miles away, you come in 3 days a week. Down the sales pit, we've got, I'm in my Charlotte office today. We don't have an office in Dallas anymore. We shut it down, moved almost everybody here. We've got Nerf guns, right? So it's one of those fun sales pits where people shoot Nerf guns. We got a putting green. If you come into the office, we buy you lunch every day. We do the group DoorDash order, just text everybody. I mean, it's never more than a couple $100, and trying to create a feeling of FOMO, right? Because I want people not to want to stay home on Monday or Friday even. So, I mean, those are some things we do. Last Friday, we took the whole company and all their spouses and all their children to a minor league baseball game. About 150 tickets. And it was a beautiful, oh my God, God could not have helped me more. It was a beautiful night, about 65 degrees. There was a big fireworks show after. I mean, you just couldn't have looked for a better night to have everyone at the ballpark.
Just staying on the company culture thing, but from your perspective as a CEO, Tim, like I heard you say earlier, you go to lunch with maybe entry level or lower level employee on the totem pole. You got to bring somebody from the C-suite with you, right? How much of that do you actually do now, right? Like it's got to be unsustainable at a certain point when it gets big. I mean, we've got 14 people that work for us now, and I still find it hard sometimes to stay connected with some of the people on the front lines, right? So do you make an intentional effort to do that, or are you just relying on whoever their manager is? I mean, obviously you got to get tons of demand for your time. You've got this magnetic, dynamic personality, you know a ton, you're just a fun guy to be around. You know what I'm saying? Like how do you navigate all of that?
Well, so we do a monthly meeting on the first Wednesday of every month. And before we've got 5 or 6 people in Dallas, and before I would fly them all to Charlotte, put them in a hotel, and it just costs a lot of money. It doesn't make sense. I have shareholders now. So like yesterday, I scheduled a lunch. We went to Heart 8 Barbecue in Dallas. There were 6 of us there, and I let them pick a place that was most convenient for everyone else. And I live way out east, so it took me an hour and a half to get to where lunch was. Just had my coordinator book me conference calls all the way there and all the way back. So I do that. That's important. And then when I'm here, I don't spend a lot of time in my office. I get way behind on my emails, and I'm going to go somewhere with this. I just make it a point to stop at Dean's cubicle and say, "Hey, dude, how's the family? You had a kid last month. How's the baby?" Right? Like yesterday at the lunch, people start wanting to talk about work. I'm like, "Yeah, let's don't talk about work. We can do that later." Like what you got any summer vacation plans? Right? Like I think you have to be really intentional about being approachable at certain times, and then. Honestly, this is where having an office comes in. I go get a cup of coffee in the break room, and I talk to people. I talk to a couple of people. Yeah. I mean, and when I order in lunch for the whole company, I make them all gather together to eat. Like we're not going to get your lunch and go back to your cubicle and work. So, and then like we had 4 new hires start last week, and I made sure that we had a 2-hour private lunch with them in the C-suite to where it was just us. So I don't know. I think you see the I know I got a bunch of athletes here. You see the football coaches that go around the field during stretches, like patting people on the back and doing all that. Like there's an element of that I think you have to do as the company gets larger. One thing I'm not doing, which will shock the hell out of y'all, is we are not doing anything around alcohol. Like no happy hours here for the company. No beer cart. You're not allowed to have alcohol in the building. Part of that is, I think there's a lot of liability around serving alcohol to your employees. Not just if they get in an accident, if they get a little too flirty with one of their coworkers, right? So it's a little bit of that, but also we're trying to foster a real family environment. So lots of fun, lots of cakes, and I bought I bought like 2 dozen bagels the other morning, and no one knew I was going to do it, and they're just sitting here when people get here. So just stuff like that, man. You just gotta anything that you can do to connect with a person, that human connection. That's important to me.
Why'd you move to Charlotte? Because I've seen you going out there a lot.
Mortgage talent. So I still live in Dallas. I'm here 2 nights a week. I fly in on Tuesday morning. I leave Thursday night. I take the 7 a.m. flight so that I get an extra night in bed with my wife, and I take the 8 o'clock flight home on Thursday so that I can crawl in with her, around midnight, and she can get mad that I smell like Jack Daniels. But it's just, there's a lot of mortgage talent here. And I think if you can build the financial model to support growth in this environment, I think you're going to be really rewarded in 2 years. Some people on my C-suite were making 2 times as much as I pay them right now 3 years ago.
Is there something special, you guys? Yeah, for sure. So like the lending space obviously is like a lot of real estate professionals have taken a dive, right? Is there anything outside of the culture building and you and everything that Turnis is doing that's unique, that kind of sets you guys apart from what you used to do with, other iterations of your other company? What's special about Turnis? Where are you taking Turnis? What's the game plan with that?
There's the softball question. So 2 years ago, I was driving to Salt Lake City, Utah for spring break, and I was going to the Best Ever conference. And I told my son, I said, why don't you bring some of your friends? We'll stay in Park Cities. You guys can ski, and I'll go to my conference. So we're driving out there, and I was like, man, I'm going to re-listen to Simon Sinek's book, Start With Why. And I loaded up, and the first time you listen to that book, you find yourself thinking about your why. You find yourself thinking about my why, my why, my why, my why. After being more seasoned in the book, in business, all I heard the second time was, what's my customer's why? Why are they calling me? No one wants a loan. They want real estate, right? Like they don't want money from me. They want to build their net worth. They want to make profit on a fix and flip. Nobody wants a loan. So as I'm driving, I'm thinking like, all right, well, what are the 3 most common? Because Simon Sinek talks about things in 3s. And I was like, what's the 3 most common things every real estate investor wants? Like, boil it down. Number 1, they want to make money. That's just kind of common. No matter how much money they got, they want to make money. Number 2, they want passive income or cash flow. Everyone says it different, but that's the dream, right? Most never get to it, but that's the dream. And number 3, they want long-term wealth or equity creation. They want to leave a legacy for their family. So the reason there's 3 triangles in Turnis is one's for long-term wealth, one's for making money, and one's for cash flow or passive income. And they form one triangle. And Turnis is Latin for threefold. So the entire company is about the 3 things that every customer wants. And then I'm taking it a step farther in that now you can own a piece of my company. So we're actually selling 10% of the company right now. Anybody can buy, accredited investor or not accredited investor. You can buy $1,000 is the minimum on a credit card. You just go to my website, Turnis, click on Invest in Turnis and get it. So I actually now have over 100 shareholders, Jason. They're customers, they're friends, they're people like I'm now becoming owned by the people I serve, which serves a purpose, right? It keeps us grounded. We are taking Wall Street back from Main Street by using Main Street's freaking money. So one of the triangles also is for passive income or cash flow. Among a lot of strategies, we intend to start paying dividends to our shareholders next year. So then not only do they own part of the company, right, but they're getting cash flow or passive income because we charge 12% when we loan money. So we make good money. And then number 3, by owning the company, you can make money by doing loans with us. I got to say it in the right order. You make money by doing loans with us. You make passive income or cash flow when and if we start to pay dividends. There are no guarantees. Consult your financial advisor or attorney. And then number 3 is you actually have true ownership, true stock in my company. And while there are no guarantees, I could be a complete failure. Look at my track record, though. I don't see a world where the stock is worth less in the future. And we're evaluating all of our exit strategies. It could be an IPO. It could be a merger. It could be an all-out sale. It could be a partnership. It could just be self-sustained private growth and additional share offering rounds to fuel growth. All of them are open. So I created Turnis. We don't take any money from Wall Street whatsoever. Like, I could go raise $100 million tomorrow. That'd be easy. And then I could offer the exact same loan products everyone else offers. That would be easy. I could also go retire and never work again, and that would be easier and more rewarding. So what I'm trying to do is something special, something that changes the industry. We do 100% financing. I'm closing DSCR loans in 7 days in 40 states. We do transactional funding. I've got a wholesale loan, a loan that nobody else in the nation has. It's just, whatever you paid for the house in 1 point for 60 days and to let you get ownership of it and just get the thing turned, right? So, I don't know. Another one. Just closed our first second lien line of credit. It was super hard to close, but super fun, right? So I cross-collateralized 3 houses a landlord had, gave him $50,000 because he needed some money to fix a couple houses up. And now I got a second lien across all 3 houses on a blanket loan, and he can keep his 3.5% interest rate he has on his houses. And I mean, yeah, I'm charging 18%. I'm not shy about that at all. But he can draw that $50K down, go get that house fixed up, get it sold, pay the $50K off. He pays nothing. And it's just a line of credit he can draw. And I'm really excited about growing that product. That's cool. A product I would use, right? Because I got a bunch of 3 1/4 mortgages on my houses.
Yeah, don't want to touch it. Yeah,
exactly.
And the single family people need that.
Right.
A lot of times those single family people need that. So you didn't offer this at all for just capital for growth. You wanted to make it completely different in the marketplace. Because that was another one of my questions. Like the lending space, there's a bunch of, for lack of a better word, suits and a bunch of corporate companies.
I get cold calls every day. They got another product. I'm like,
yeah.
You got anything special? It's just going to be almost a conversation of, can you beat this guy? Can you beat that guy? Send me your term sheet. I'll see if I can beat it. And it's just like, no.
So what you're talking about there is there's nothing intrinsic about lending. And that's what I hated about lending. And that's why I'm doing this. So like a shareholder gets 20% off fees when they close a loan. So if you think about it, really our standard fees on our fix and flip are $19.95. That covers all the processing, underwriting, legal, etc. Imagine if you are an active buyer, you buy $1,000 worth of shares. On your third deal, you've profited from buying $1,000 worth of shares because you save about $400 alone, right? And I've got my sales guys down here; they're not even pushing it. I'm like, guys, why aren't you asking? Like, and my sales manager is going to take care of this for me, just so you know. It's like, hey, I've got your term sheet here. Are you a member of the Turnis Founders Club? Oh, okay. Well, would you like to save $400 on this loan? Go buy $1,000 worth of shares. Forward me the email. You save $400 on this one and $400 on the next one and $400 on the next one. I mean, one lady was doing 8 refis with us and is now saving $3,200 because she gave me $1,000. So, not a bad decision. So, but Stratton, Dean, I'm trying to create an intrinsic relationship with the customer to where I represent what they want, right? We just launched our referral program. You get paid $500 on every loan anybody ever does with me. And if they refer anybody else, you get $250 on everyone they refer. And now, kind of sounds a little multi-level marketing. It is. That's the intention because it's different. No one else does it. If you tell me I have to do what everyone else does, not interested, right? I can I can go fish and hunt. I don't need to do this. I get to do this. And I've never been so passionate about anything I've done in my 23-year career.
What are the markets you're not lending in right now and why?
California, because it takes 18 months to get licensed. We're working on the licensing. Arizona, because you have to have a brick and mortar. We're working on that. Nevada, because you have to have a brick and mortar and 2 people working there. We're working on that. Oregon, because you have to have an Oregon licensed NMLS person that touches every single file, and that's just stupid. There's Michigan and Minnesota because of licensing, New Hampshire because of licensing, and it seems like I left Alaska because it's Alaska, and then Hawaii because it's Hawaii, and then there's another state or 2 because of licensing. But we chose to spend money and time in places that didn't require licensing at the beginning. But through team architects and through recruiting at the right time and having a good staffing plan, we actually just hired a new general counsel Those of you who don't know what that is, a full-time lawyer that works for us. So she's taking over the licensing project. So we'll be in California early next year, and Arizona soon, and Nevada. I'm really excited about Nevada. Really excited about Nevada because a lot of people can't meet the requirements because you have to have brick and mortar and 2 employees. So I'm excited about that.
What are you seeing foreclosures specifically for investor loans doing anything normal? Are they spiking? And what advice do you give to people that get behind on their loan? I'm sure you've foreclosed on more people than you probably like to imagine. Like, what advice do you give to that person that got in over their head? They're getting behind on something. Like, what do they say to Tim? Like, I'm sure lots of these people just bury their heads in the sand and then they don't respond, right? Like, what's the protocol that you would like to see as somebody that's been lending money to investors for so long to try to salvage that relationship, and how did they approach that?
Yeah, in summary, it's watch your mouth. So we've got a foreclosure that we just filed recently that there is nothing this customer could do to get me not to foreclose on them because they got NSF on their first payment, and then we tried to redraft it, got in NSF again. We called, and they got super defensive and started cussing out the young ladies in my office. And at that point,
it's over. Yeah.
Good luck. Notice of default coming. Now, will it make it all the way through to foreclosure? Probably not. That's why I limit my loans to 70 LTV. Right. There's always enough room to get out of them. So far, we haven't had any foreclosures at Turnis. We will, and I know we will. You have to. You got to talk to people, right? Like, and you have to come up with common sense solutions. A gentleman recently didn't pay his insurance on the property at renewal, and then had a missed payment, and then wouldn't return the phone calls, and then got put into default interest, and then got foreclosed on, or got a notice of foreclosure. So at this point, it's been 3 months, and now they owe me 3 months of 18% interest, 3 months of insurance. I found out they didn't pay their taxes. They owed their taxes, and they owe late fees, and they owe default interest, and they owe attorney's fees. And we at this point, we can't talk to him because he's with the attorney's office. His mom starts calling. His mom is calling my office. Yeah.
That's crazy.
And so finally, I said,
is he old? Yeah, how old is he?
I'm really skirting the line, bud.
Yeah.
I finally just said to the attorney, I said, look, you do tell them they need to stop calling the office, and here's the only offer I can make to reinstate. And the bottom line is he found a way to come up with the reinstatement money. But if he had just answered the phone 3 months before, right? Like, I mean, that's the thing is, like, lenders, we don't want to take loans back. It hurts our track record. It looks bad. Like, it's a default rate. Every time I go to a bank for a line of credit or a warehouse line, I have to show my delinquency rate, my default rate, and my foreclosure rate. And it's 3 different numbers. It's 3 different numbers because it shows how good I am at curing delinquencies and defaults, right? It's a report card for me. If every delinquency goes to default and every default goes to foreclosure, it tells you my post-closing servicing team sucks.
Yeah.
Right. So, you just got to communicate. I had another guy, the second lien line of credit was a product I'd been wanting to offer, but a good friend of mine got in deep and had a bunch of overages and then got caught by the city on 2 houses, and he was just in a pickle. And he called me and he talked to me and we worked it out. Right. I was like, man, I've been wanting to test this product out. Let's make you the guinea pig. Right. And now my team is redesigning everything off the guinea pig. So I don't know. I mean, the number one advice in anything is be honest, transparent, and take accountability. Most of the time, the lender is going to work with you. But saying, oh, I'll make the payment Friday, and then not making the payment Friday, and then saying, oh, I'll make the payment Wednesday, and then I'm not making the payment Wednesday, and then, oh, I'll do it Monday, then not doing it again. Like, at that point, like, your word's worthless. And I have to move to protect my collateral. Because you 3 guys aren't shareholders yet, but you're going to be, because I know you all got $1,000, and I don't want to see all your names on the same order either. Damn it!
Deal Champs owns a piece.
But like, now I have to protect shareholders' money. Right now, I'm a fiduciary for over 100 shareholders. By the time we close this crowdfunding, I'll have 1,000 shareholders. so if you're not talking to me and you're not working with me, I have to go into boss mode and protect my shareholders. And, that just sucks for you, because I have to, the law is on my side.
So you don't see anything with foreclosures for investor loans with all the crash news, all the stuff, everybody's losing, nothing. You guys aren't seeing any blips on the radar with any of that?
No, not at all. Actually, the only thing we're seeing is there are increased delinquencies on the DSCR loans. It's gone from about a 2% delinquency rate to close to a 5%. A lot of that has to do with increases in taxes and insurance.
No.
I personally still hold a lot of real estate in Texas. And I have houses that I refinanced in 2021 or 2022 that were a 1.25, or 2020 through 22 that were a 1.25 DSCR when I refinanced, that are now upside down on the cash flow.
Wow.
I mean, if you haven't looked at your
crazy out there though.
Yeah.
Well, but yeah, all right, no state income tax, right? Yeah, I mean, like I've got houses where the taxes are triple what they were 3 years ago. I've got insurance premiums that are double or close to triple of what they were 3-4 years ago, and rents went flat about 2 years ago. So now the good news is for me, I did 2-year leases 2 years ago, so I kind of locked everyone in at the peak. Now they're all starting.
What
to
do
move
you do
out.
with that stuff? What does Tim do? Are you gonna if you don't see rents going up, property taxes probably not going down, and cost of insurance probably not going down. You already know it's negative, right? Do you just strip out the equity, sell, and put it into a better asset, or what, or something else?
So right now, every asset that goes vacant, my wife goes and fixes it up, and we take the cash and we put it. We've got a 506c cash flow fund. Our investors make 10 to 12% monthly, and so we just keep dropping, because you can drop like 50 grand at a time in it. And I just told Jen, I was like, look, just drop it all there. Let's wait for things to settle down when I'm not so busy. And because it's only a 6-month lockup. So after 6 months, the investors, all they have to do is send an email and they get their money back in 30 days. And I just told her, I said, look, let's just, because we want to buy like a condo in New York City. She wants us to buy, I want to buy a ranch, that kind of thing. But I don't like, savings accounts right now are paying 3.5%, 4%. So I just drop all my money in my cash flow fund right now. I'm not a buyer right now. I feel like the commercial markets could drag us down a little bit more. I'm a buyer of single family that's well priced. I'm a buyer of triple net lease. Still not a buyer of multifamily, even though I own a bunch of it. Love car washes. But that's about it.
When do you think the multifamily stuff's going to happen? We were talking to Michael Zuber about this the other day.
I feel like multifamily will bottom out Q1 of next year.
That's kind of what Zuber was saying.
Like, that's when all the debt's going to come due, and it's finally time. You can't pretend and extend anymore, for lack of better words.
The debt's already coming due. It's there's 3, 5, and 7, right, on these bridge loans typically. So you we're in 5 right now. So anything that was 3 or 5 is pretty much already matured, or will mature this year. Anything that was on a 7 that hadn't matured, as long as it was bought before COVID, it's fine. So I'm not predicting a bloodbath. I'm just predicting. Was it CBRE? I think CBRE does a monthly market saturation report that includes new units coming online, and there's still a ton of multifamily being built that hasn't come online yet. So when you already have the leasing specials on the windows, right, and the drapes hanging from the balconies, that until those come back down, I don't feel good about multi. But then again, it's probably too late.
The car washes. I just listened to a podcast about whatever private equity company took a bunch of car washes public, and now they only build. What are your thoughts on the car washes? Because we can't make it pencil from an acquisition standpoint.
I've been investing in the Midwest with a partner of mine that they just find old rundown car washes.
They're just scooping them up. Same thing as like the storage and everything else.
I think it's everything. You play in the sandbox where the big guys aren't, with a local operator that understands the market. I mean, it's just same playbook, just a different structure.
Who's 3 entrepreneurs you look up to? And like, I want to model my company. This is who I take my lessons from, and I want to apply it to what we're building here.
Well, there's Nick Gould, who was the chairman and founder of Invitation Homes and the chairman and founder of B2R Finance. He's the one that recruited me in. Great mentor of mine. There's a gentleman by the name of Jeff Tennyson. He works for CEO Coaching International. He used to be the CEO of Lima One. He was CEO of several other large mortgage companies that went public. He's done billions in exits. He's my CEO coach and just lifelong friend. The other would probably be Ray Dalio, the CEO of Bridgewater. His book, The Principles, is just fantastic. And then I'm going to go ahead and go fourth. Simon Sinek, his book, Leaders Eat Last. I'm a former Marine, and it's based off Marine Corps ideology. I just find his content and thought processes to be thought-provoking. And I'm someone that I just like to think, right? Like, I'm very intellectual. So those would be the people I really kind of look up to and follow.
You got a fifth since we're already at 4?
Not off the top of my head.
Awesome. You guys got any other questions?
No, this is great, dude.
I could talk to Tim all day.
Yeah,
I got so many other things I want to go through, but we're at our time, so we'll have to have him back on.
Yeah, Tim.
Say when, man.
So much, bro.
When's the next event?
Oh, we booked it, didn't
The
we?
one you're coming to once you get California online.
Yeah,
get California online, bro.
We're dying to get you to get California online.
I'm working. I got to fly there and get fingerprinted and everything.
There you go. Then they'll find out all the stuff you've done.
It's not very hard. Public records.
All right, guys. Thank you so much for tuning in. Tim, where can people find out more about Turnis and more about you?
Turnis. At Turnis. What is it? At Turnis Loans or at Tim Herriage or Turnis.com.
I love it, guys. Thank you so much for tuning in. Don't forget to hit like and subscribe. Go use Turnis if you are in real estate. Tim is the best.
I'm the best.
Thanks for coming, Tim.
Thanks, bud.